Big news from the Federal Reserve. For the first time in 2025, the Fed cut its key interest rate by a quarter point, bringing it down to 4 to 4.25%. Interest rates affect pretty much everything in the economy: mortgages, credit cards, business loans, job prospects. So why the cut now? The answer is jobs. Job growth has slowed way down. Only 22,000 jobs were added in August. Unemployment ticked up to 4.3%. That's a warning sign. The Fed hopes lower rates will give things a boost. But it's not all smooth sailing. Inflation is running at about 2.9%, higher than the Fed wants, but not out of control. And here's the twist: tariffs. Tariffs have driven up prices on everyday stuff like coffee, clothing, making the Fed extra cautious about cutting too fast. Behind the scenes, the decision wasn't unanimous. Newly appointed Governor Stephen Moran wanted a bigger cut, a half point. He was the lone dissenter. Moran was confirmed just hours before the vote and is still on leave from his White House job, raising eyebrows about Fed independence. President Trump tried to fire Fed Governor Lisa Cook, but the courts blocked him, saying presidents can only remove Fed governors for cause. And Cook's alleged missteps happened before she started. The Supreme Court might still weigh in, but for now, Cook stays on the board and voted for the cut. There's heavy political pressure. Trump is calling for even bigger cuts, and some worry the Fed is caught in the crossfire. Meanwhile, fears of stagflation are simmering: slow growth, stubborn inflation, partly thanks to tariffs. So what's next? The Fed is signaling more cuts could come later this year. The big question: will lower rates be enough to jumpstart the economy, or are we in for a bumpier ride? Thanks for watching. Hit that subscribe button.